Hello friends, welcome to Money Never Sleeps by Macromind, your weekly dive into the forex and crypto markets. In this new analytical series, we'll break down key events and deliver insights on Euro, Gold, and Bitcoin. So let's get it started. So here on the graph, you see the DXY 1-week chart, and the dollar appreciated against major currencies on Monday following the announcement of a framework trade agreement between the United States and the European Union. This agreement, which is part of a series of deals aimed at preventing a global trade war, has caught the attention of investors. During a meeting in Scotland on Sunday, the United States President Donald Trump and European Commission President stated that the agreement included a 15% tariff on European Union goods, which is half the rate that Trump had threatened to impose from August 1st. This follows the recent agreement between the United States and Japan, and top economic officials from the United States and China will resume negotiations in Stockholm on Monday with the aim of extending the truce by 3 months and preventing the escalation of tariffs. So what do we have here? The dollar has experienced a significant decline this year due to fears that higher tariffs on trade with major partners would harm the US economy. This has caused investors to consider moving away from the United States assets. Currently, we are rebounding from the major trend line, bullish trend line that has formed since 2014. The first target here is reaching 100 level. Then, supposedly after a minor rebound, we will head towards 105, 106. As concerns about the economic impact of vanishing tariffs subside, investors are shifting their focus to corporate earnings and central bank meetings in the United States and Japan in the coming days. On Wednesday, the federal interest rate decision is expected at 6 p.m. UTC, and 30 minutes after that, there will be a Fed press conference. Both the Federal Reserve and the Bank of Japan are expected to maintain their interest rates at their policy meetings this week, but traders will closely monitor their subsequent statements to gauge the timing of their next moves. Investors will also be watching to see how Trump reacts to the federal rate decision. The President of the United States has been exerting considerable pressure on the Federal Reserve to implement substantial interest rate reductions. Trump appeared to be on the verge of attempting to dismiss Powell last week, but he backed off, acknowledging the potential disruption to the market that such an action would cause. So let's switch to our pairs. Let's start from the euro. It continues to decline, lost 1.2% against the dollar. The trade agreement between the United States and the European Union has dumped concerns about the potential economic damage, so that's the most reason here. The sentiment towards the dollar has been positive recently, and it could improve further if the United States data, including Friday's NFP figures, indicate a strong economy. But let's take technicals, let's take a look at them. Since March 2025, we've been developing really nice bullish trend here, and it reminds me, and I think that it actually is Elliott 5 impulse wave formation. So wave 1, 2, 3, 4, 2 correctional, second and fourth, and the fifth impulse. Now what we have here is the ABC correctional wave. So the wave A, we broke down the trend line. On the B, we retested it, and right now we are developing really nice bearish impulse here. The first target is 1.15700 support level. I believe that we will touch it today, maybe tomorrow. We'll break down. That's what I think. Then retest and go towards 1.12. This is the most probable scenario. That's what I expect. But we'll see. I don't really think that there will be any bullish sentiment after all the events. So let's go to gold, and what we see here, we used to have pennant. Well, pennant got broken. So eventually We have two major targets. Well, all these trade deals eliminated the tariff wars risks, so and that weakens the bullion. I expect the direction towards 3,200. That's the first target, and there again, I don't know. I wouldn't go so far for the second target at 2,960. I think it is too far and everything can happen. But it looks like we're in the middle of the range between 3,200 and 3,440. Let's transfer to weekly chart, and weekly chart is more interesting here. We have the bearish divergence on the RSI on the weekly chart. And the last week got finished with the hammer, inverted hammer. So all these facts combined together, they make to us really bearish sign here. So once again, 3,200 most probable. The second target, I don't know. Let's wait. Let's wait a little bit here. So the Bitcoin, maybe yes, maybe no. You never know. What do we have? Well, same story. Same story. Well, the DXY grows up. Everything that trades against the United States dollar goes deep. Gold decline. Euro USD decline. Bitcoin here, the decline 1.21, 1.22. Let's take a look at July 25th. This is the date where I gave you the weekly report, weekly crypto. And I've been telling you guys that you better expect some uprise towards 120,000, and there you go. We had the uprise towards upper border of the descending channel, slightly below 120,000. So right now we are rebounding from it, but I don't really expect that this is something technical. I think that this is something fundamental story, some fundamental story. Um, yeah. So I marked here liquidation levels. First short liquidation levels still is the same, just slightly below 125,000. Long liquidation level went somewhere downstairs, slightly below 110,000, where there is a major support level. So, you know what? Let's push our, so here's my new stop loss here. I pushed it upwards just closer to the current price just in case. I don't really want to risk. And if we see anything, any signs of breaking down the trend line, just go away because you never know. This is the Bitcoin. Anything can happen. It's really a highly volatile asset. Here, there may be another trend line, and there you go. You will see 110,000. Why not? Everything can happen. The weekly, oh no, let's go to the daily. On the daily, what we have is the bearish divergence. It's not formed yet, but still it is shaping, it's forming. The MACD on the daily basis is in the red zone. So last time it was May 20, this May, June, the MACD was in the red zone here. So the most positive what could happen is that we will consider sideways direction and we'll go sideways till, I don't know, August, September, or we may decline towards 110,000. Yep. And let's take a look at options open interest. You see how dramatically it dropped. So it may be the sign that market participants don't really want to stay in positions in the Bitcoin. None of them. Not even short sellers, not long sellers, like no interest. So if there is no interest, then there will be no dynamics. If we want to have some dynamics, then we need some volatility. So probably there will be something on the market. But for now, there are no ideas here. For gold, first target is 3,200. For euro, well, decline, decline, and decline. So basically that's it. Follow the economic calendar, use your risk management, and may profit be with you. Trade cautiously. Subscribe if you like it, and wait for the next video next Monday. Take care, guys. Bye.